Hello and welcome to the Al-Attiyah Foundation podcast. My name is Mari Beveridge. Today, we welcome to our podcast series Yao Li. Yao is the CEO at SIA Energy with over 26 years of experience in Chinese energy policy and the oil and gas sector. She has a deep understanding of the structure, drivers, and dynamics of the Chinese government, Chinese national oil companies, and Tier 2 Chinese LNG players. Yao advises SIA clients on energy policy, market outlook, entry opportunities, and value chain partnership strategies. Yao, welcome to the podcast.
Thank you very much. I'm Yao Li, the founder and CEO of SIA Energy, a China-based energy consultancy. It's a great privilege to participate in Al-Attiyah Foundation's energy podcast series. Thanks for inviting me.
Thanks very much. Well, to begin, can you tell us a little bit about SIA Energy and the services that you provide, and also what sort of companies come to you for advice?
We are energy focused and China-based. We serve entities looking to invest in China, those already in China looking to expand their foothold, and Chinese entities looking for entry and expansion in the overseas energy markets. Our clientele includes international oil and gas companies, US LNG exporters, European and Japanese utility companies, global commodity traders, investment banks, private equity and sovereign wealth funds, as well as international organizations, Chinese governments, Chinese energy companies, infrastructure investors and operators, etc.
Sure. So, what would you say differentiates SIA Energy from other energy consultancies that are operating in China and in Asia?
Well, we established ourselves 12 years ago. So we've seen that, Asia makes up a significant portion of the global oil and gas demand and trade, but there are very few Asian perspectives in the energy consulting world. Most risk analysis and opportunity analysis are generated from Washington, D.C. or other Western capitals. So SIA Energy is charged with providing unique Asian perspectives on geopolitical and strategic issues related to the ever-changing energy world. Our position is rather unique. We blend local insights, on-the-ground research, commercial intelligence, access to strong local networks with global experience and deep professional knowledge. And over the last 12 years, we've not only established a good reputation of understanding China, but also a strong track record of helping our international clients succeed in this complex and highly competitive market.
And if we can move on to the energy transition, how is China managing the transition from fossil fuels to renewables while maintaining energy security? And obviously, there's been progress in renewables with more coal-fired power stations being built, which sort of suggests continued momentum in developing new coal projects. So, what would be the reasoning behind that strategy, if you have any insight?
Well, China's progress on the renewables front has been phenomenal. Almost 360 gigawatts of new solar and wind capacity were added last year, taking the total installed capacity of renewables to 1,400 gigawatts, which is equivalent to the rest of the world combined. And in the first 4 months of this year, China already added 130 gigawatts of solar and wind power. This is equivalent to the entire installed capacity in Japan. So China added this in only 4 months. All these investments are starting to make a visible difference to power generation. In 2024, some 65 of all incremental power supply came from either solar or wind power. And this trend continued in Q1 this year, when thermal power generation declined by more than 5% year on year. And the drop in thermal power generation actually is a major reason why China's Q1 carbon emissions dropped by about 1.5% year on year. And on coal-fired power, I would like to note that we expect China's last new coal-fired power plant to come online by 2028. There wouldn't be any more major coal power plants after that one. Of course, coal's existing share in the power generation mix still is around 35%. But that base load capacity will be needed to balance the intermittency of growing renewable power production. However, the share of coal power in overall energy generation will gradually decline from about 55% today to about 20% by 2040.
And you mentioned China's sort of carbon emissions there. How are China's own decarbonisation efforts aligning with the European Carbon Border Adjustment Mechanism and the EU ETS, in your opinion?
China's oil product demand, in our view, has peaked or say plateaued in 2023 at 17.5 million barrels per day. And there's no going back to positive growth. Too many structural drivers are working against the oil demand. We estimate that almost 600 million barrels per day of gasoline demand has been displaced by EVs, and 500 million barrels per day of diesel has been lost to LNG-powered trucks. Meanwhile, conservation efforts and the slowdown of the property sector are slowing growth in the petrochemical industry. That said, I don't expect a sharp decline in overall oil demand, but rather a long plateau or gradual decline from, today's 7.5 million barrels per day to about 16.9 million barrels per day in 2030. And that is an annual drop of about 1% year on year. And replacing oil with power in the transport sector definitely has been one of the driving factors behind China's peaking carbon emissions. Emissions peaked, we think, in March 2024, so a little more than a year ago, at about 12 billion metric tons of coal equivalent. Of carbon equivalent, and that's been either flat or downhill ever since. And the EU's CBAM is an important external factor that has helped to accelerate China's decarbonization efforts, such as including steel, aluminum, and cement, which also are covered by CBAM, into the Chinese ETS system. So EU carbon policy has a signaling effect for China, and it helps to create a level playing field for all parties involved. In fact, China's ETS today already covers about 6% of China's total emissions.
Wow, interesting. Okay. And I mean, you sort of briefly mentioned LNG there. If we can move on to LNG, obviously we're a think tank based in one of the world's largest LNG suppliers. And so we're interested in the global LNG market, including the current state of play in China. And with regards to LNG, who are the tier one players and who are the tier two companies? And what are the real differences? And also, is it true that the tier two companies are becoming more important?
Oh, yeah, absolutely. The tier one players refer to Chinese three NOCs, namely CNPC or PetroChina as the listed arms name, And the second one is Sinopec. The third one is CNOOC, or call it CNOOC. The tier 2 players are all the rest of the Chinese player, mainly other than the three NOCs, mainly the downstream players such as city gas distributors, power generation companies, or truck LNG distributors, who came into the LNG importation segment later than the three Chinese NOCs, because that sector used to be monopolized by state-owned companies. So these tier 2 players can be either state-owned, provincial government-owned, or totally private players. And by no means they are small companies. Many of them have investment-grade credit rating from multiple Western rating agencies. And tier 2 players emerged about 10 years ago when Chinese economy was in a bust period. Oil price also halved after the November 2014 OPEC meeting. And NOCs contracted LNG as well as pipeline gas import were in the cost disadvantage against spot LNG, because these import contracts were linked to the rolling average of multiple months of oil prices according to the contract pricing mechanism. So when spot LNG flooded into the Chinese market, NOCs at the time had difficulty in digesting their long-term import contracts that have take-or-pay obligations. Then the tier 2 players, instead, without any historical baggage, were willing and able to import LNG. But they didn't have much experience, nor did they have infrastructure access like today. So 10 years ago, SIA Energy, we were also a brand new company at the time. We identified that force and gave them this nickname, tier 2 players.
Right.
And actually had a hand-holding approach and helped them learn international LNG trading. And now these tier 2 players are already established players in international LNG trade. And as a peer group, the tier 2 players have different sets of drivers than Chinese NOCs. So first of all, as downstream players, they are either end users themselves or they own a captive market. So they have their own supply security mandate. And secondly, they wanted to have vertical integration along the gas value chain to invest in LNG receiving terminals, or even overseas liquefaction, so that they can hedge price risks. And thirdly, and more importantly, as NOC's downstream gas customers, once the tier 2 players have their own imported LNG and access to infrastructure, they will have much stronger bargaining power against Chinese NOCs. And 10 years ago, the tier 2 players as a whole owned only 10% of Chinese LNG import capacity. 5 years ago, they owned 15%. But today, in 2025, they have 60 million tons per annum of import capacity, which represents 32% of nation's total of 185 million tons per annum.
Okay.
By 2040, we think China will have a total LNG import capacity over 280 million tons per annum, and the tier 2 will own 40% of that.
Well, staying with LNG, I wanted to ask you as well about, of course, how tariffs are going to be affecting things. Of course, China has recently imposed tariffs on LNG imports from the USA. How do you think this energy trade will pan out?
Right. The US-China trade war is still ongoing, so we don't have a definite final tariffs yet.
But do you have a sort of forecast or a view?
Yeah, absolutely. Yeah. So far, Chinese government has basically set about 25% unwaivable tariffs on US LNG. And US is the world's largest LNG exporter. China is the world's largest LNG importer. It's just unfortunate that these two players cannot directly trade with each other. But commercially, US LNG will anyway be traded and swapped globally, because especially when TTF prices, I mean, the European prices are much higher than Asian prices. This will give strong incentives for the US LNG long-term buyers to sell their US LNG to the European market and then buy JKM or spot LNG from Asian market to import to domestic market. And that will actually save companies a lot of shipping cost. So with or without a trade war, US LNG will be traded globally.
Sure.
And so that wouldn't significantly impact our trade today. But given the amount of long-term contract we have signed up with US projects, the volume will steeply grow in the next few years. Last year, US LNG only made up 5% of our LNG imports. But in the future, we are looking at somewhere between 25 million tons to 30 million tons of US LNG that we committed to offtake. So diverting that volume to international market will be a challenge, and that will have an impact on prices.
Okay, and sort of staying with the geopolitics, what is your view on the current sort of risk with the influencing China's energy imports, from, let's say, the Middle East and Russia? Do you think that the current political situation would affect the decisions about the building of Power of Siberia 2 pipeline?
Right. Chinese oil import dependency is about 70%, but gas is only 40%. So gas is still a domestic output dominant story. Sure. Our oil imports are well diversified as the country buys crude oil and products from over 40 countries. And the Chinese oil traders like Unipac and PetroChina International are the largest in the world and can quickly shift procurement patterns if geopolitical difficulties arise as such. And given that China's oil demand has plateaued and the global market is well supplied, China's energy security of oil looks much better today than it did a decade ago. And on the gas front, Russia is is China's largest import source last year at 41 BCM, or 23% of our import mix. Australia LNG ranked the second, roughly 20%. Turkmenistan pipeline gas ranked the third at 19%. And Qatar ranked the fourth at about 19% of our import mix. So the imported LNG and Russian gas are not directly competing head-to-head. First of all, they cover different geographical regions. Yeah. Russian gas come to northeast China, and imported LNG covers east and southern China. So geographically, they are in different places. And secondly, Power of Siberia 2 is actually directly competing with Central Asian China Pipeline D. And because Russia is in a much more desperate position with basically Central Asian Line D that goes through Tajikistan and Kyrgyzstan, that proposal has already been, indefinitely deferred.
Okay, interesting. Well, I'm also wondering if you could update us on the sort of production of shale gas in China. Just briefly, I'm aware we have a little bit more to get through, but do you think that will be competitive with imported oil or LNG at all?
Shale gas in China was only 25 BCM last year, only making up 0.6% of China's gas supply mix. But imported LNG instead made up 1/4 of Chinese gas supply. So they are not competing with each other. And shale gas was not growing either. The 3-year CAGR was only 1.6%.
Okay.
And so in the shale oil side, many ingredients of the recipe for US shale revolution are actually absent in China, as well as the rest of the world. Shale oil has not become commercial in China due to many below and above ground risks.
And I want to ask you, we've sort of touched on this, but how do you perceive the shifting geopolitical alliances in the energy sector? I'm especially interested in the relationship between the West, China, and of course, Gulf states.
China sees the Gulf as a very important strategic provider of oil and gas and a growing market for its increasing high-tech goods and services. And secondly, China now views the GCC as a geostrategic partner. No more does it worry about ruffling the feathers of the US, which used to be the prime hegemon of the region. And thirdly, China does see dangers in conflict in the region. As a result, it has gone a great effort to reconcile differences between Iran and Saudi Arabia. Nonetheless, we still view the US and Israel as destabilizing forces in the region.
Interesting. Okay. Well, that is my final question and concludes the interview. I'm so grateful for you joining us today on behalf of the Al-Attiyah Foundation. I'd like to thank you very much and for providing our listeners with your valuable insights on the Chinese energy industry. And thank you so much, Yao.
It's been a great honor and pleasure to be here. Thanks for having me. I look forward to working with more GCC clients and friends in the future.
I'm sure we'll be speaking to you again. And thank you to our listeners for joining us. A new Al-Attiyah podcast will be released in the coming weeks.